You're tuned in to Agriculture Today, and we start our Friday show with the grain market update with K State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, what are we seeing on the futures market?
Well, continued uh, sideways, relatively low movement. We've had moisture. I think our colleague Chip Redmond has talked. We'll talk about that. That we've generally had cooler and wetter conditions in some areas of the Corn Belt than had been expected. Still, and a lot of what my thoughts are about where we're going in the future has to do with whether we maintain such positive, supportive crop weather or not. Still lean towards the majority forecast of hotter, drier conditions coming later on, and in balance of July on into August, September. So the next 90 days tell the story, and in anticipation of that, you've got on actually Wednesday when the markets were last open, D's corn closed at 419 and a half. September 405 and a half. I think we try to watch too where the volume of trade is on those. Again, we're now into July, well into the contract closing period for the July contract, and just very light volume left in that volume and open interest left in that July contract at all. So we pretty much transitioned over to the December to the September contract, and actually most of the volume it's there's 615,000 165,000 bushel contracts. So you got a bunch of contracts, a September contract, but you also have that and a bit more in the D's contracts. So we're definitely new crop focused and oriented in how we're looking at these markets. And soybeans, actually, soybeans have found some support. There's strength that's been happening in the soybean general oil seed oil markets from both Europe and the Black Sea region, Ukraine, in terms of lack of availability of sunflower supplies. I think it's canola also, canola rapeseed. So anyway, you've got that happening, providing some support for soybeans. November closed at 11.21. We were down to 11, so it's not like 50 cents to $1 higher, but at least it's found support and not quite as prone to go down. And I would say too that that same issue of rolling out of the July contract into the August contract in the soybean complex, that's already happened largely. Again, you have just a 2,700 contracts left in July now, and the August contract has 96,600. So we've pretty much rolled, and of course most of the focus, again, just like for corn, is come into the soybean complex. November soybeans, again, 407,000, 5,000 bushel contracts. So the markets are putting their money into the new crop contracts. We're not just rolling, not rolling only into the upfront lead contracts in between there. So it is as it is. And of course, for wheat, we've been kind of sideways in the wheat market. Again, we had such a run up earlier, over 750 happening within the last 30 days, 45 days, had fallen down to about 575, and really have been pretty much going sideways from there. So not a lot of change. And we've got harvest going on. I think as you follow the harvest reports, I think we have mixed signals. I hear some great yields. I hear some disappointing yields, a lot having to do with the moisture from last fall, as I understand it. So anyway, we'll see how all that plays out. So far, we haven't had any thunderbolts driving the wheat market largely higher, and I still the issues that still weighs out there are our international wheat market numbers out of the Black Sea region. That's still there. We have more reports, sustaining reports showing differences between the USDA and in-country projections for major crops coming out of Brazil and Argentina, Brazil in particular, that we still haven't converged yet. So that's still a surprise that could happen out there. Prices have gone low enough that U.S. exports of some of these crops are very competitive with what's happening out of South America. So I guess you're trying to make cider out of bad apples. When the price is low enough, you do end up and spur on export usage. We do see profitability now in the ethanol sector from relatively low priced corn. The bad, I guess the challenging part would be that we have coming out of that quarterly stocks report, we had more grain on farm for some of these major crops than we'd had in past years, and so farmers still holding on to grain, old crop grain, looking to sell. So a lot of pressure right now building up, and if we don't have a major move to the higher side based on weather or whatever, then in the next 30, 45 days, there'll be some pretty anguished sales in the cash market. But again, that's we'll see what July and August bring for that.
And are there places in the country where weather is really playing a big role in what we're seeing in the markets or could be playing a big role?
Yeah, and you can see on the soil moisture maps where those major rains came in, floods in the northern Iowa, southern Minnesota, South Dakota area, and you've got crop damage there, farmland damage. But it's really interesting when you move outside of that and look at literally the rest of the Corn Belt dry, just really dry. So to me, you just got a conundrum of a situation to where you have a few places very, very wet, almost everywhere else pretty dry weather, hot, at least hot weather forecast the next again 60, 90, 100, 120 days or so, and or at least 90 days, and it just I think where we're at right now is we do have a weather influenced market. We've had enough things happen to bring moisture to hold off hot dry conditions that the market is not worried about things yet. They're not expressing that in terms of price moves. So so here we stand with prices that farmers wish were sharply higher, but they're not yet. But still a lot of risk. Given our best weather forecasters and what they expect, we still expect challenges to come, but it's not here yet. So the market says, okay, show me. We'll see. Will it come or not? And we have farmers' old crop sales riding on the outcome.
Dan, something you wanted to share with our listeners today are some updated balance sheet numbers and starting off with what you saw for corn.
Just real quickly, when you in essence, if you just take the new crop acreage numbers, a little bit higher acreage, so you turn what had been about a 14.8 billion bushel crop at 181 bushels an acre into about a 15.1 billion. So 300 million more, but it does take away worry for the ending stocks figure. If you plug in the previous record, which I'm more inclined to do, 177.3 bushels per acre, you're still even with these higher planted numbers and harvested acres numbers, you're still at only 14.8 billion. And then if you have anything less than that, tying that record, then you're 14.6, 14.5. Ending stocks get below 2 billion bushels. But so and prices respond in kind, going from 440 up closer to 5 or over 5. But that's all waiting to see what happens. And did the same type of numbers, a little bit lower planted acreage for soybeans, and if you just go strictly on the yields, holding everything else unchanged, then the USDA's record projection, 52 bushels an acre, that and prices at 11.20, you end up and see a fair response if you go to 51, 49, 47 bushels. Of course, the likelihood of that right now it's hard to put a major a major probability on that. But in my own thinking on soybeans, if you I'm thinking there's about a 30% chance that the USDA is right that uh, and these especially for corn, these record high yields for corn and soybeans. But if you come in with just a good yield, a very good yield, you and I'd put more probability, more likelihood on that happening, 40% instead of 30%, and and it makes all the difference for soybeans if something at 11.20 versus something at something above 12.5 to 13 or more. It makes all the difference for corn, as we kind of talked about a little bit of 440 as they had projected to something close to 475, $5 or more for the season average price. So I in the most objective mode that I can be as that we can be here at K-State. I think we still have to look at the probability of these alternative outcomes and see not where we stand right now on given what we've just seen through early July, but we need to see August, September, October to see how all this finally plays out.
And Dan, rounding out today's conversation, something we don't usually talk about, but wanting to make a mention of, what are you seeing around cotton right now?
Well, the uh, amount of cotton acreage in Kansas I think it's projected to be at 110,000 acres. That was unchanged from earlier in the from the prospective planning report, down just a little bit from the uh, from last year. But the big story is on the national side. We saw acres jump up from year to year about 9 heading towards 10%. So although Kansas didn't change a lot, especially down in Texas and Arkansas and some other states, they had sharp increases in cotton. So I guess we'll see the cotton marketing driven so much by their loan program and working with commercial gins, et cetera, for quality issues and for quality components that cotton has the opportunity to do well. And the long term for cotton in Kansas, I would say in areas where we're struggling for water, to have adequate irrigation water is pretty positive. It's one of the crops that if our aquifer really does decline, we could look at what water we have left under very depleted wells and still do pretty well with cotton. So
Dan, I appreciate you taking the time to join us today and give us our grain market outlook.
thank you very much, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be right back.